Good morning and welcome to Bazaar Morning Call. I am Anuj Singhal. With me is Prashant. Prashant, hi. Good morning.
Good morning.
Oh, we also have Sonia, of course. We have privilege actually, Prashant. We have India's most stylish anchor. We all knew it, but of course, yesterday Sonia got the award for that. Let's have the picture. There it is. Sonia.
Congratulations, Sonia.
Thank you. I'm just a reflection of you guys.
How humble.
I have the most stylish male anchor. What more do I want?
So Anuj and I bask in reflected glory, sitting next to you. So.
I was just discussing, one of the perks of our job is that we get to anchor with Sonia. So, yeah, Sonia, congrats.
So, I thought that, we read the news daily. Sometimes it gets a bit dry, boring. So better to amp up the style quotient a bit. But thanks, guys.
Okay, now we get back to business. Of course, the big news overnight, and this reminds me of that Kevin Spacey movie, which is one of the best movies that I've seen so many times, 21, where he says always account for variable change. One variable changed yesterday, which was from Bank of England. Now we don't know if it's a master stroke or some kind of harakiri, right? Surprise QE move, and that left the short scrambling for cover. Look at what happened to the UK's bond market. You would be surprised. Of course, equity markets also rallied. But it might just be a bit wrong to extrapolate this to Fed, which some people might be doing. Of course, today's F&O expiry. So in that sense, with this SGX Nifty gap up, things could get really interesting. But I'll track the dollar index and the Dow futures closely through the day to see if this rally runs into some kind of a risk or not. Sonia, hi.
Absolutely. And this is important, right? The Bank of England buying UK bonds to avert a financial risk. So how bad is the situation over there, and
Absolutely.
how long would it take to sort of trickle into other markets globally? That's the big question, right? And it's reflecting in our own markets as well. The Nifty is now closed below that 17,000 mark. 6 straight days of losses is what we've seen. And even selling in cash has continued for 6 days now. So put together, over 16,500 crores of cash has been pulled out from foreign investors. The US market saw a sharp rebound overnight, so let's see if that pullback is something that our markets would take forward as well. But I'm still watching out for the central bank action, because it just goes to show how fragile the situation is globally. A, with what the BOE has done. B, you have the US GDP numbers that come out later this evening at 6 p.m. So they're going to be tracked very closely as well. And Anuj, Prashant, both of you weigh in on this. The Nifty below that 200-day moving average of 16,990. How much significance would you give this BOE move to how nervous or fragile the global scene is, and what the impact could be on our own markets?
Absolutely. Sonia, before that, we discussed daily moves in any case. This move just tells you UK is in a mess, right? And you have no clue. Sometimes you talk about tightening, then in between you have this easing and all of that. It also shows you, in our conversation with a lot of experts, I remember Mark Faber once telling me that RBI is the best central banker in the world. And for some reason, has its credibility, has its autonomy. And I think that is something which is clearly intact. So really the big question is, with this BOE move, and it looks like there must have been some political pressure, right? Have government started to reach some kind of maximum pain point? With the way the bond markets have been moving over there, and in that case, will you see more action from the other central banks as well? For long, of course, the market believes that at some point the Fed will also pause. The terminal rate is something that everyone's discussing, but I think look, we are in a situation where nobody knows right now. What's happening. For example, who would have had the courage to take a contra long position yesterday, but that would work today. So it's going to be very difficult market in the short term, and normally short term fixes lead to short term rallies. These rallies are very short lived. They last for hardly a day or two, if the overall trend is still largely on the downside. So I think for the day, because it's expiry, we need to see the extent of short covering, because FIs are sitting on 1 lakh contracts of short. And straight away the market opens above very important levels. The SGX Nifty is indicating a gap up. The SGX Nifty high is 17,108. That will be the first resistance for the day. Anecdotally, you see on the days of big gap up or gap downs, the SGX Nifty high or low becomes your first reference point. Also because today being the monthly expiry, you look at the options data, 17,000 call and a 17,100 call have combined open interest of 1.62 crore shares. I think 17,000 call writers will be in trouble starting 9:15. What about 17,100? I think for that to sustain, you need to see Nifty go above 17,120 and trade above that for bigger short covering. If that happens, then there will be bigger short covering. However, if that doesn't happen, then the risk of this rally being suddenly sold into will be very high, and that's something that you got to keep at the back of your mind. So I think maybe using options could be a better strategy for the day. The market's bigger texture will be clear once you have more mature reaction today in the global market. I think normally you see on day of the action there's a knee jerk. Next day there's a more measured move. So I think today you'll see a more measured move. Both in the European markets and in the US market, and then we'll take it from there. But let's see how it pans out. But Prashant, I mean, this was really something which came out of nowhere.
I mean, just imagine if the US markets last night were flat or lower, right? I mean, given how the market left off yesterday and with the expiry, etc. today, I mean, anything would have been possible. But at least we get a higher start, and then we kind of pick up from there. I mean, yesterday, same time, we were saying that in the US markets, the turnaround Tuesday failed, right? The day before yesterday's session, when markets traded higher for bulk of the session, sold into close. But it was a wild Wednesday, absolutely wild Wednesday. I mean, it almost was reminiscent of, just in terms of news flow and in terms of price moves as well, especially on the bond market side, of maybe 2013 during the European crisis, or even 2008, maybe a mini sort of replica of that. Just incredible, absolutely incredible. By the end of it, I'll come to implications of that in just a bit. You had a decent close, the S&P and the Nasdaq, and we were talking about this yesterday. And I was highlighting that even in June, when the market bottomed out in the US, it did so 2 days after the June FOMC. And as of yesterday, we are 4 or 5 sessions after the September FOMC. Markets were extremely oversold. Simple things like the RSI, etc., had gotten to indicating that things were oversold and due for a bounce. So we've got a bounce. What that does is a different thing. Can this continue for a bit longer? I think it could. The E-mini futures, right, that's on the S&P, that's posted a bullish outside day. It's closed above 3733, and it's left off at about 3733, which means it could get up to about 3850 kind of levels. So maybe there is a bit more it can kind of squeeze out from this particular move. US Treasuries, again, wild moves. I mean, you were above 4%, and the 10-year fell, the yields fell 21 basis points, just like that, back to 3.75. The 2-year was at 4.35. It left off at 4.1 or so. Massive moves. So, when you have this fast-paced, aggressive moves, can you really make sense one way or the other? What comes next? I think not. I mean, you can't really do that with these kind of chaotic price movements. The dollar fell, which is a good thing. The DXY is down from almost 115. It didn't quite get there, 114.75 to 112.8. But again, I mean, are these temporary moves that we are seeing? Oil went up about 3% or so, $89 plus. European natural gas prices went up 26%. Because there are reports which indicate that there is going to be more shortage as Europe enters the winter season, and of course the Bank of England move. I just want to say one thing. I think it's very unlikely that what we've seen in England happens elsewhere. Forget elsewhere; it happens in the Fed, because that is the one place it really matters to. You can broadly look at what's happened in England and say that this could happen, but I don't think you can juxtapose what's happened in the UK to any other place, because in the UK, it's a mess very much created of their own government, which is when last Friday they announced those huge unfunded tax cuts. So, you had a situation in the UK where the government was sort of easing, which is announcing tax cut, and just 5 days prior to that, you had the Bank of England, which had hiked rates by 50 basis points. So monetary policy was tightening and fiscal policy was easing, and in 2 or 3 days flat, I mean, the market has basically aligned the two. It's forced monetary policy to fall in line with fiscal policy as well. Bank of England will buy bonds, which translates to easing as well. What that does to the currency, because you need higher interest rates to stabilize the currency, which is not the case anymore. So there is a price to be paid, and we'll find out about that. But the point I want to make is that what's happened in the UK is very much a UK phenomenon, a problem created in the UK, and the BOE trying to fix it, maybe successfully, maybe unsuccessfully. In the US, I mean, I don't think you should kind of jump from this to say, well, you know, it's about time that the Fed will start to pivot as well. So that's the point. Sonia.
Absolutely. And let's see what happens from here on, right? The IMF has said that it's not recommended, the kind of moves that the UK government has done in the last many days. So there's complete chaos over there. But we have a couple of guests joining us to tell us how to approach the markets. For now, it's a big rebound that we're seeing across the US, as well as the SGX Nifty indicating a start well in the green. Let's kickstart the show with a